Thank you all for joining us for our Q1 2025 post-earnings call Q&A. Let's dive in and go into some of the questions that you all had. The first came from Hyliion, which is, what major improvements has Hyliion made to the Carno since the last earnings call, and are there still any significant roadblocks or major challenges to be solved at this moment? On today's earnings call, we really highlighted two initiatives that are underway. The first is around the production of our linear electric motor, which is the middle part of the Carno. We had outsourced that to a contract manufacturer. They're behind on deliveries, not seeing the yield we'd like. So we are in the process of standing up assembly of that part in-house here in Austin. And we don't foresee that having challenges. We've actually made these components in the past. That's where we started. So really to improve the throughput, we are setting up in-house manufacturing. And then the second one was around the regen part of the Carno core. That we talked about on the last earnings call. We were having problems removing powder. As part of that process, the part has mesh designs within it, so we spaced out some of the meshing to allow for better removal of powder. That then had a negative impact on performance. So our big highlight on this earnings call was we do believe we found a way to sufficiently remove the powder from that part. And now we're going through a process of tightening back up that mesh in order to achieve the performance that we expect out of that component. So those are really the two initiatives. LEMS is what's preventing us from shipping additional customer units or early adopter customer units right now. And then the regen is actually something that we can do as a rolling change. The next question came in from Rusty the Kid. Are you planning on preparing a mobile Carno generator with an EV charging port and onboard CNG tank for traveling demonstrations? So the quick answer is yes. We actually see that as going to be a great way to showcase the product. We recently just did a showcase up in Cincinnati where we had visitors in. They got to turn the generator on, see it firsthand, see how quiet it is, how compact and easy to operate it is. And that really brings the product to life. So we plan on doing road shows where we bring a unit out for others to see as well. Next question came once again from Hyliion about Hyliion is targeting break-even gross margins on a cash basis by late 2026. What are the key drivers to achieve this, and how do you plan to address initial negative margins?
Yeah, first let me define what gross margins is. When you're selling a product, it's the difference between the price at which you're selling it and the direct and indirect cost of manufacturing. So initially, when you're developing the product, you're not as focused on gross margins or on the cost of developing it. You're really focused on getting the design right, make sure it's functioning, and getting the initial units in customers' hands. And then once that's done and you start to think about higher volume production, you can start to focus on cost reductions. And the way you do that is you look at the design of the part. Can we change the design to manufacture it more easily? Can we change the materials to use something cheaper but that still functions well? And then you're also competitively bidding the procurement of parts that you need. So typically when you do that, you can get costs down. So we're already at that stage. Even though we're delivering our initial units, we have teams of people that are looking at all the components, how we're sourcing those, the materials that we're using, and looking to get costs down even as we deliver the initial units. So by the end of next year, the end of 2026, we're projecting that we'll get to that break-even point where our revenue or price that we're selling units and the cost of manufacturing them are equal. And then, of course, after that, we'll be making money, gross margins on the product as we grow. So that's what our gross margin forecast means.
Then we had similar questions come in from Sover and Silent Alert around how many GE Equilibrium printers will Hyliion have installed and operating in Cedar Park by the end of 25. Right now, we've got a little over 20 of these printers installed and up and running, but we've got more being delivered frequently. We just had one delivered a few weeks ago. It's now going through a bring up. And by the end of this year, we plan on having over 30 of these printers installed and operational, which will give us the printing capacity we need for the following year. Now with that, a follow-on question came from Matt Carver around, is Hyliion planning to expand into any additional lease space in the Cedar Park location to scale production? Or are there plans to scale production in another location? So right now our printers are split between Cincinnati and the Cedar Park facility, and we have ample space in Cedar Park. This is a 120,000 square foot facility. even by the end of this year, with those 30 printers total across both the facilities being installed, we will still only be utilizing about half of this facility. Half of that is in the printer space, and then another half of that is for office area. So we have ample space to grow here with the lease we already have, and then in the future we could look at additional facilities. So with that, we saw it as a great quarter, showcasing the reliability of the Navy unit that we delivered about a quarter ago, and then a lot of progress made on those two initiatives I mentioned, both on the LEMS and on the regen design. And so we see this keeping us on track to being able to deliver the 10 early adopter customer units this year, deliver additional units, and then be into commercial launch by the end of this year. Once again, thank you all for joining this Q&A session, and please go listen to our earnings call if you haven't already. Thank you.